Good evening, traders. It's Mark here from the day trading room. The time is coming up to 9 o'clock London time in the evening, a close of the market. Where are we? 16th of February. I want to run through some of my trades that we did the last few days and today very quickly. I'm probably going to pick out the best and the worst because otherwise it'll be quite a long video. I haven't had a chance to do a video. It's been very busy. Let's run through the Dow trades first. I've got the oil in front of us. Let's move over to the Dow. Not much happening on the Dow for me today. A bit caught out, to be honest, and misread the situation. Excuse me. This was a miss for me. First of all, let's get this out of the way. This was a bad miss. We'd opened above yesterday's high, so we're strong. So what we're looking for a first pullback. Nice opening drive. Pulls back. You don't need more of an invitation than this. There's the moving average just pushing up to it. There's the VWAP, whatever you want to use. There's your tick pull back to zero. Even if you waited a bit and waited for that volume to push on, there you are. Take out the highs. That's the chunk that you should be getting. And if you stuck with it and kept a little bit of a runner, you got a lovely little trade. Didn't get involved in that. Missed out on that. Little bit disappointed. Took this trade, which unfortunately stopped me out. This was the pullback on the deeper cycle. I've spoken about this before. When you've got this nice good move, it wasn't really steep, the trend, but it was strong. It rolled over and it just started to have an acceptance in price at this level here. So I was waiting for this little pop lower to the VWAP to take my long. There's my first long. It then started to roll over a little bit more. I'm still interested in this trade, and as I've spoken about before relative to relation to stops, and somehow you can use tight stops sometimes and not the others, is that when you've got this situation and you're trying to buy this cycle, it's very difficult to pinpoint it almost exactly. Sometimes you get lucky, and as I've said, sometimes you get a little bit of hint from the tape. Maybe a buyer will step up who sees the same thing you've had and just starts to push you. But often it will go against you a little bit, which is why you've got to give it a little bit of room and I'm not a great big fan of scaling on a lot of the setups because it's going to get you in awful trouble. But some setups do require it, and as long as you've got a bit of a plan, you can't do yourself much damage as long as you know your ultimate risk. And that's a little why I've been experimenting a little bit with the counter channels you've seen on before. I've used them on some of my videos, just looking as a way of guiding the pullbacks and the stops and stuff, just to try and I'm just trying to create another extra little setup to go with my arsenal of setups that will hopefully help capture a few more of those cycle moves on the Dows when it's on the Dow, should I say, when it's like this. Anyway, back to the trade quickly. This was a bad trade for me because it pushed over, got this low here. This was literally based on the low tick. Pushed back up, scaled that one out, so that one's gone. Little bit of a profit on that, 10 ticks. Started to roll over again, and I ended up taking a stop on this trade, which was this entry here. If you want to separate it like that. Disappointing, but I just got caught. I think there's some news coming over the wires about Iranian ships in the Middle East doing something or other. I don't know what it was, didn't pay much attention to it, but it just caused a little bit of a spike in oil, just caused equities just to tickle off a little bit. But I just got caught in that. Not much of a loss really, because profit from that, a loss from that, but still annoying nevertheless. But I'll take those every day of the week. They're nice trades. They are. Sometimes they don't work. Another one here. This one was crazy to miss. I got the entry great. Push down, spike low. There's your minus 1,000 ticks. Lovely push in volume. Right, filled that range. There's yesterday's high there, the green dotted. Just waited for that just to pop up. Took the entry there. Almost a few ticks off the low. It was really great in my window. My little 5 p.m. Quarter to 5 to quarter past 5 London time window. That I like to look for a change in direction, potential change in direction. And just lost my bottle a bit on that. Nothing more than that. I wasn't sure about how this news was, whether we were going to drive lower, and so what I ended up doing is reversing the trade there. Because this was a reasonable move down, I thought it might have caught a few people out. I was long there, and okay, yeah, I took a 9 or 10 tick profit on that. I reversed it. Why did I reverse it? Because I just changed the way I thought about the trade. I thought, okay, low ticks, first pullback in ticks. You really should be on short on this, looking for a gap fill. And in actual fact, the first premise was better. Should have stayed with that, let that run back to an overbought condition on the cycle. This was a cycle lower, but as I say, the oil was spiking at the time. I wasn't sure of this news. I thought that the short trade was the better trade. It wasn't. I ended up coming out for scratch on that as I realised that there's no momentum here. If that's a proper trade, you've got the push down, push back up, dwindling volume, then you get the spike in volume, then it revisits the lows, and we could have filled the gap. That was the premise of it. Didn't work. What can you say? It doesn't work. Sometimes it does, sometimes it don't. That's trading, guys. As long as you're managing the risk. In actual fact, you know the total on the day for the Dow is probably profit. I haven't totted it up yet, but it's probably a small profit, purely because even though they're bad trades and they didn't work out, purely, well, this one here was obviously a profit, small profit on this, small loss on this, but that's the way it is. Didn't get on the end of anything. So that was it for the Dow. Let me quickly talk about the one yesterday. Excuse me, where are we? Yeah, very quickly. Classic setup for me here. Low, weak open, push to the low, pull back to that low, tick again, tick pull back to zero after a good low. After this move here, I consider reasonable. Tick pull back to zero, rode that down. I was looking for a further move, to be honest. That's why I gave it a few more candles. Didn't work, came out, and it was a nothing profit really. Range was so small. Similar setup here. Again, just looking for stuff that doesn't take out levels that they should, and when the market doesn't do something that's perhaps expected of it, do the opposite. Here's the high of the day. Tagged it, pushed up. This was a failure. I mean, look at the range on these candles, very low. Took a short, let it roll down, closed it at 5 o'clock on the dot. That's my little window that I like to look at. I've spoken about it before. 5 o'clock on the dot, London time, all out. And what was I rewarded with? 10 ticks. Pretty much waste of time. Well, won't say that. I'll take that back. I will take 10 ticks every day of the week. But I prefer to get a little bit more mileage when I'm risking. When you're risking at least 10 ticks, that doesn't really. It's not a feasible thing to look for long term, just taking 10 ticks all the time. You want to look for, it's okay taking a scale at 10, but you want to look for a little bit more. So that's the Dow. Nothing exciting really, I'm afraid, on that. And the range is quite poor, and disappointed I missed that spike lower today. That was a gift. Hope some of you guys got that. Let's talk quickly about oil. Oil, some good opportunities. This was yesterday. Push lower here. Started to put. Let's get the right day on the 3 minutes so we know we're talking from the same hymn sheet here. Okay, here we are, guys. This is the oil trade. Push lower. Started to push back up. And I should have taken that short there, but I didn't. What I ended up doing is chasing it a little bit, which reduced my profit. And when I think I'm chasing, I always end up taking less because I'm aware I'm chasing and I'm aware I'm on borrowed time. It's okay chasing sometimes. Know the context. It's very much reading the tape, rely on the tape. Probably a bit too much sometimes, but I can get away with it. Which is why tape reading is such a powerful tool if you can get it right, because you can get away with some poor entries because you get a little bit of a hint that you're wrong, or you get a little bit of a hint that you're okay. You can get away with it and scalp it out to get a quick 10 to 15 ticks on oil, no problem. But this was literally, there's the low, push lower again, trying to push lower again. It was this consolidation did it for me really. This little push up higher, immediate push lower. I'm taking the break. We popped back up and I got a short there. It rolled over nicely, and as I've said before, I'm taking momentum type trades, break trades, chase trades. Stop has got to be tight, really has got to be tight. Rolled over and just took it out into this here, this momentum candle here, which was just before the 85. It was like 85.06. I thought, that's probably its lot, but then it did go lower. Push lower, and this was a nice little long trade for me. And actually, we pushed lower, and look, you could see how we barely managed to push under the 85. There's a whole number. I like the whole numbers. Good volume, crescendo, a few spikes under, bought immediately. A lot of buyers here. When I saw this this good buying, holding. It wasn't dropping below. There's my entry, and it's a great risk reward trade. Let's move this so we can see what's going on. It's a great risk reward trade. You can have your stop under that low. We're buying under or around the 85, and I'm looking for a move back up into the range. Let me bring in the other chart so we can see what's going on and tell you what my premise of the background of the trade was. This is this is the sort of situation we'd had. You can see how key that level was, which is why I got it drawn in. This is the 85.30, 85.40 level. Plenty of support there, broke through, plenty of resistance. So that's what I was playing for, really. There, support the 85, which helped my cause a little bit, and I was just playing for a move back up to that resistance. But as it happened, I couldn't be at the screen for this after I took this trade. I took this trade, it started to loiter around, and I had to go away and do something else. So what I did is I placed an OCO order, and that's one cancels the other. And what that does is means that you can put a stop in and a limit in. And I put a limit in at 85.37, just before that 40 level, and my stop was just below that low. And what it means is one will cancel the other, so you can leave it in. You're either going to get hit on your limit, and if you get hit on your limit, the stop gets cancelled. If you get hit on your stop, the limit gets cancelled. So you've got no resting orders left in the market. You're not going to be left with a position you don't want, which was fantastic. It worked out great. 30-cent trade. Maybe I should go away from the screen more often. I'd have probably been scaling that out in increments, but I got the whole batch on that, and that worked out to be a fantastic little trade for me. This one I want to spend a little bit of time discussing because it's important to make sure you don't get hit on these. This is a flush trade. Okay, I've talked about a flush, talked about exhaustion before. Starting to grind down. Always looking for that flush. I like to buy on the flush. It works a lot of the time, but you must be strict with it. You can't let this go any further. This is a good flush for me, good crescendo in volume. I'm seeing the tape buying coming in. I'm buying. But the important thing is with a flush, if it goes below that low level, that tail, you have to come out. Whether it's 5 cents, give it a little bit, 5 or 6 cents, but that's it. That is it. Don't put your stop right on there. But the premise of the flush is that it's based on panic. It's based on emotional trading. It's not based on people thinking clearly. It's based on them putting orders in, stops, market orders, get me out. Or get me in if they're wanting to get on the short side. They're not thinking clearly, not waiting for pullbacks. That's the premise of the flush. That's the premise of the exhaustion. If you don't get it, if it revisits that low, then the premise is negated somewhat. I don't mind it revisiting very slightly and popping straight back up, but if it's going through, you've got to come out. You've got to come out because it can be a day like we had back at the 31st of January when we were getting monster moves up, flushes. They appeared to be exhaustion. They'd pause a bit before they'd plough another 50 cents. You can't be there taking that short and getting absolutely thrashed on a bit of news that's come out. You've got to manage the risk, and it's going to happen. Days like this are going to happen where you're going to take a great entry, you're going to get stopped almost at the low tick, and it's going to look great. In actual fact, you can take some clue from what happened today, because it wasn't really a flush, because we started to push a lot lower and we were grinding and there was a seller just sitting there, not very aggressive, but there's no buyers ready there just to pop it back up. So I took that long there and I took a stop, and it was almost a low tick, but because I'm so strict with it, I don't mind, and I know that majority of the time they work great, and when they do work, you can catch them, they pop right back up, and it can be the beginning of a change in the trend. I like to scale to reduce my risk. Didn't even get a scale on that. If I'd have got a scale, it would have turned out to be a break-even trade, and that's what I try and do on those, is wait, just get that little pop, scale out some, so that I can still have to stop below the low. It's not going to damage me. It's going to be a small profit if anything. Didn't work out. But what I did is I took that as information, because we then revisited that, what I thought was a flush low, but we stayed below there for 3 minutes. That's interesting info. And there's a lot of volume there, relative to what we've done during the day. So I'm changing my bias now to thinking, okay, I want to perhaps look to get a short for one more push lower. So we push back up to this moving average here. Not that I use it that much, but it's a guide for me. I'm more interested in what's happening on the price action on the tape. 84.40, 84.42, great seller. Spent a lot of time up there, and when I see it just running out of steam on the counter trend push, I see a nice risk reward trade. That's all I'm looking for, guys. I'm looking for nice risk reward trades. It's part of my premise, good move lower, pull back. I realize I'm quite late into it, but the risk reward's okay because I can see there's a bit of a selling going on there at 84.40, 84.42. He's not letting it go much higher. I can have a little nibble. Where's my stop? I can afford to have it there. And if it goes higher, it's not going to kill me. I can take those every day of the week. There's a downside to sometimes having tight stops, and as I talked about before with the Dow, if you're taking a wider pullback, you can't necessarily have it. But sometimes these are setups that you can, and if you're chasing, I don't like to chase, but in some instances it does feel a little bit chasey, but sometimes just getting the last bit of juice of that move. And as I said, tape reading gets you out of trouble a little bit with it, and that's why it's a great little tool to have. You can get away with it. This worked out okay. I didn't hang about with this. When I saw it tag this low, so there was my short there, and my stop was really tight on that because I don't want to get caught on a complete counter trend move. Started to roll over nicely, picked up a little bit of steam, nothing on the volume, tagged that low. As soon as we tagged the low and pushed back up, I'm out. I'm out at 85.22. Gave a little bit back, but fine. I was hoping for a little push lower, but when I don't see it and I don't see any volume, I know to get out of the thing. But this was an interesting action afterwards. We just consolidated, and I kept looking for this flush, kept looking for the flush, didn't get it. I was waiting for it, and this arrow here indicates what I should have taken because it was the 84 level, and I'm waiting for that push lower, but it just didn't go quite low enough for me. I missed it by hardly anything. Look, 84 holding, rolled through. It was your second go at it, just didn't go enough. I wanted this sort of move, really, this 20, 30 cent, 40 cent move under the 84. Didn't get it, so I didn't get on the end of that buy, which was disappointing. Because it was a good volume crescendo. It was all this pent up orders just pushing through. Wasn't quite enough for me, but it did work out okay. So maybe some of you guys got under that. It was a nice little dip under the 84. What did it go to? 83, 85. I was looking for not even that much more, but sometimes you just miss it. So not so great, but of course some stuff on that. Let's very quickly talk about today. Premise of this again. Let's get the right thing. Resistance here. You can see we've got a lot of resistance around the 85 level. That's what I'd drawn in. Let's put that back on there. So you can see that's what I was looking at, 84, 90, 85. So when we start to push above the 85, I'm interested in the short. I'm just waiting for a little bit of confirmation. This is sloppy. It's not a very powerful move. So for me the short's on. I'm just waiting for it to put in a high first so I can at least quantify my risk. High was put in there at 11. As we started to push back under towards 85, took the short as 85.02 or 85.01. Where's my stop going to be? You know where it can be. It's going to be above there. And the premise is quite nice. The trade's quite nice. It's based on the fact that this range is going to hold, that we pushed up above it, that we can't hold above it. Risk again is quantified, and I ended up getting quite a nice little trade out of this one. And I was looking for a push back to the midpoint as my first exit of the move, which is the VWAP here. I got my first exit here. Let me just double check on my execution list. Bear with me. Why is that not reloading? I don't know why it's not reloading on my other screen now. I'll tell you about that in a minute. Well, it's not seeming to show me in my page I want. Okay, anyway, yeah, it was around, I think it was 77, the first exit, and then I was looking for the 60s. I actually had a bid in at 60, but as it approached it and didn't fill it and popped back up here, I thought, oh, I've missed it, and jumped and hit the offer at 65. So, but anyway, great little trade that, and the premise, it worked okay. It was literally looking for that range. I've got the key level mark before I'm ready to trade. I see it fail. If that had carried on, I wouldn't have taken the trade. I wait for the high to be put in before I take it, and then my risk is quantified, and then I know I'm potentially okay. And I let this run longer than perhaps I would normally, and I'm really pleased that I did, because I had to sit through a lot of rubbish. This is a lot of chopping around my entry point, poking above it, chopping around it. It took a lot of to say, you know what, just sit with this. It's okay. It's working okay. The sellers may come in. The longer you leave it, the less likely it is to work, admittedly. But okay, got away with it. Worked nicely. Let's move on. I rambled more than I thought I would today. Yeah, this is tape read trade, really, and also based again on failed pushes. They're nice setups for me. This oil inventories came out. Don't know what the figure was, to be honest with you. They pushed higher, but what I'm interested in is this push lower. You could have taken that buy. I've talked about that before. The 50% move back or the pull back from the bar. You could have taken that buy for a pushback. I didn't. I wasn't too keen on the fact that this only did one bar, and it didn't go that much higher than that level before pushing down. I waited. Then I saw a nice guy come in, and he stuck on 100 lot on 85, and he kept getting hit. And he would refresh. He wouldn't even get completely filled. A lot of volume was done, so I took the short. I joined him at 85, exactly 85. I got a fill, so that was great. I was ready to come out if it had popped to the 15, so it was about 13 to 15 cent risk on that. I didn't want it. I was mindful that this was this, and it could push through and hit the top of that level. So I was a little bit nervous of it, but I'm happy to give it a little go. There's a tape guy there helping me out. It's not too happy above 85. Every time it's gone been above it, it's pushed back below it. So I know there's probably a lot of people expecting it to push, and when it doesn't, I get a little push lower. Got to push lower, and I'm only looking for this low here. This was the low of the move from the inventories. So as soon as we start to approach that, I'm all out. I don't want to hang around with it. I'm a little bit nervous about it anyway. Little scalp, nicely done. Leave some on the table. It did roll over, and anyone who got a nice little trade. Missed this little pullback, pushed to lows, but got the next trade here. Let's move on. 21 minutes already. Let's get cracking here. Yeah, something came out, Middle Eastern news. It was tickling over the wire. I don't know what it was. Something about Iranian boats stirring up trouble around Israel. Something or other. Who knows? Anyway, volume started picking up. So when I see this volume picking up on high of the day, and it's continual for several bars, not just one like this. It's continual. The continuation trade for me is on. It's on. I'm ready. I'm going to take it. I really want to get on it because it's a good trade for me. Pushed up. Bought it just under the 85. I can't find my. Let me just pause this. Okay, right. I got my executions here now. I can see what's going on. Yep, I got an average fill there of 95.5 at 16:33 London time. So that was around here, and this is a great trade, but I'm really disappointed I didn't absolutely load the boat on this because these are great trades. Look at this great push up, so much volume there, so much volume. You've got plenty of room to run. The highs that there, okay, it was holding 85 a little bit, but the fact that it just kept pushing and pushing and pushing, and as soon as I see that drive, I'm in. This is the candle I'm in at, 95.5 average. I'm just whacking it in. Your stop can be low here, although I gave it a little bit more room because I really felt good about the trade. Disappointingly, I took a first scale 80 for 85.07 because I started to see that tape. There's a guy who was still left over from earlier, 85. From the earlier trade back here, this one, he was still lingering. So I took a little bit off 85.07. There's no need to. Volume's building. It's brewing. There's some news coming out. Everyone's thinking, oh, it was shooting off to the moon. Just get on board. Manage the risk, of course. Give it a little bit of room to breathe, but get on board it. But anyway, I'm annoyed about that first scale. First scale at 7, then again at 85.19. Which was this push here, this candle here. A little bit early again. I don't know why, but I just suppose I was just scaling out into the move. Better scales than my last two, 22 and 37. So that was better. The 37 was much better, and really I should have kept at least one measly contract or 2 or 3 contracts on just for that last push there that you get. But anyway. I'm pleased with that. I should have made more out of it. I should have really put the pedal down on that one because I really do like that setup. but best out was 37 and in at 95. It's still a great trade. I can't complain, but I could have made more out of it. um, what are we talking about now here? Similar setup to the Dow. Small position because you're looking for that unwinding. Let me just get the cycle in so we can see. This is the trade here. On the 3 minute you can see, incidentally we pushed up to that key level there. Anyway, pulled down. I'm looking for the unwinding. There's my 50%. But as I said before, this is the sort of trade you've got to give a little bit more room. I've started to do a little bit of research and a little bit of investigation based on this Keltner, um, on these pullback trades, because they're difficult to pinpoint spot on. I thought I got it, nailed it here, because we hit the 85 to the button. I bought a few here. We rolled over, and it's going against me. I'm thinking, I'm going to end up taking a 30-cent stop on this. I really wasn't happy with it. But the premise is still there. The premise, I mean, really, the stop should be here. Really, the stop should be here. But I can't bear to give stuff more than 30 cents, even on a small position. But the position was small because, as I've said before, if you're taking that cycle, sometimes it's difficult to pinpoint it, and you don't really want to be coming out when actually it's a nice place to buy. So, as I did with the Dow thing, I bought a few more as we just popped under that 85 key level. It was a little bit of a flush. I bought a few more there. We popped back up, and I took it all out as we just popped over the 85. Really, because the trade didn't work exactly as I wanted, and I ended up taking quite a bit of heat on that, and I was so close to being stopped. It's okay because of the small size, and it was nowhere near as aggressive as I was there, or as even I should have been with that one. Obviously not giving back profits, but the premise was fantastic. Dip under the VWAP, it would have been better if I'd have waited for that flush. Really, that's actually one of the better trades that you can wait for, when you get a flush but still on a pullback. That's even better than waiting for the flush at the end of a trend. If you get a flush at the midpoint, I'm looking for continuation. Whoa, it's a fantastic trade. 27 minutes, I've waffled on enough. So yeah, that's the trade of the day for me. Really wish I'd got on the end of that. That could have been a month maker. Still pleased nevertheless. Let's see what happens tomorrow, guys. Good trading. Keep the risk managed. That's the most important thing. It really is. I can't stress that enough. Even I've talked about some of the trades, I'm getting them wrong. I'm getting some trades wrong, getting them right. But because you've got the risk managed, but you stop at a sensible place, judge where the stop is going to be based on the setup. It took me ages to get this right. Look at the setup. Are you trading momentum? If you're trading momentum, you can use a tight stop. Are you trading a pullback for a continuation? If you're trading a pullback and you're going slightly counter trend, but the premise is still there, you're going to have to scale it right down the size and use a wider stop, but look for a wider target. That's generally what I'm looking for. Revisit the highs on that. I lost my bottle a little bit, probably because I wanted to protect some of the profits from earlier. But it's so important that you manage the risk. Think about where you're going to put your stops. You can use tight stops, but only for specific setups. There's no point in using tight stops on trades that need a bit more room, and the same is, there's no point in using wider stops when you can use a tight stop. Think about what the setup's about. Think about where you're going to put your stop. I'm not trying to teach anybody. There's no right or wrong way. I'm just saying, when I started to figure that out, then the P&L really started to improve for me. It was something that took a while, but if you can perhaps write down your trades and put them into segments of momentum, perhaps chasing a little bit trades, take reads, scalps, and ones that you've got mileage in, then you can adjust the stops to suit. But of course, reduce your position size. I know it's difficult when you're starting out. If you're trading one contract, you can't do it. Maybe paper trade it. If you're trading one contract, you can't go half a contract or a quarter of a contract, and I understand that's difficult. So you maybe have to leave those alone, but still mark them down. Note how they work. And for some people, obviously 30% risk even on one contract when you're starting out. I know that some guys have got a smaller account. I understand that. But manage your risk. Make it keep it sensible for your level of account size. And that's all I can say. If you keep your risk managed, you'll be in the game longer, and the more time, the longer you stay in the game, the more likely it is that you'll make a great job of this. Incidentally, I've just noticed that the high of this was 5 o'clock London time. I hadn't noticed that till now, and I should have noticed that. That would have been nice to hold that right until the end there, 5 o'clock. Funny how that works. Anyway, good trading, guys. Back with hopefully another video later on in the week. I don't see why not. Speak to you soon.